Alrighty, welcome back. Jumping right in to that headline. Stocks and crypto are in greed mode. That's not just my opinion. This is CNN has a fear and greed indicator. And if you want to understand how to use it, when there is fear, I'll do it this way. When there is high fear, that is considered blood in the street. Stocks might be cheap, stocks might be attractive. When there is extreme greed, that is the other extreme. Stocks are more fairly valued, even highly valued, overvalued even. So you have to be very selective. If you're a beginner, keep track of this indicator. It's free. And you can go to cnn.com/markets/fear and greed, or just Google fear and greed indicator. Let's look at this timeline. So this is just the tracking of that fear and greed indicator. And as you can see, when stocks were low and fear was high, that was in April. That was a great time to buy if you want to make money. Not everybody does. Some people don't care. Of course, everyone wants to make money, but not everybody wants to take action. If you wanted to avoid losing money, let's say you couldn't take that kind of risk. Maybe you're on margin, maybe you're leveraged. You'll want to pay attention. If you're a long-term investor though, maybe you don't want to mess with your stocks, with your funds, your retirement accounts. Don't ignore this. Don't sell anything. But if you're a risky trader, a risky speculator, you want to know when to dial it back. So that's fear and greed indicator. StockTwits has another one. It's a little wonky. I don't like it as much, but StockTwits does have a new one. Go check that out. We are closer to greed and beginning fear. So that's something interesting. I have, of course, my trusty charts, and if we look, the best times to buy a position in stocks or to go shopping for bargains is when stocks are down 20 to 30%. And I have these green lines. These are long-term moving averages. Use your favorite moving averages. I have my own, but in this case, it would be like the 200-week moving average. If you happen to buy every time it hit that group of moving averages, the long-term moving averages, you made money. And that's where we were in April. We hit there, and that's when you go shopping for your favorite stocks. If you're a risky investor or a speculator, aggressive investor, maybe you use some leverage. And we are not there. We are away. We are above a bunch of moving averages. Up top, you can see I listed my opinion on the different categories. We've got stocks in greed mode, crypto in greed mode. Let me go to Bitcoin. Now, greed mode isn't bad. It just means there's no blood in the streets, that things are not on sale. That doesn't mean sell everything either. And I'll go over some potential strategies, not for everyone, just my opinion. But crypto is definitely in greed mode. If we look at the total market for crypto, it's above all the moving averages. If we can get them on sale, I would have said, hey, we're in value mode, or there's blood in the street, it's time to go shopping. But we are not there. So we are in greed mode. That's my label that I put up there. If you look at metals, it's very interesting because you could say that, hey, maybe gold it's in greed mode. I still think it's in fair value. Something like silver and platinum, they're above their moving averages. Again, I don't think they're in greed mode because I look at these and I compare them to like money supply and the debt supply, and they are just not overvalued yet. So I put them as somewhere in the middle, core. core, fair, not deep value, which is the lowest, and you should buy a lot when it's at deep value. It's more in the middle, like fair. So that's my opinion on the metals. Here's platinum. I'm a big fan of platinum. It is not in a bubble. It is not in greed mode. Okay. So platinum, palladium, I would consider those even attractive. Energy, and that would be like your oil. Oil in a fair zone. We'll call it a fair value. I think it's not a deep value and it's not in a greedy overvalued, so I call it fair. And then one more category that I'm including is international. That's equities, international equities. I believe, even though something like VEU, which is international, I think it's closer to fair when you look at the valuations. I think it's closer to fair, even though it is at new highs, because we see gold going up. We see international is just not as bubbly. Like if we look at the Nasdaq divided by VEU, the Nasdaq has really outperformed international. So that's why I would rather own more international, even though I think all stocks are a little bit overvalued. I would rather own more international than, let's say, really expensive Nasdaq stocks. That'll give you an idea of some perspective. But I think there's bargains out there. I don't want to specify individual stocks, but there's deals out there. If you watch some of the other videos, you'll know what I'm talking about. If you follow us on the Discord, you'll also know what I'm talking about. I wanted to look at a little bit of news. I know Trump had there was an interview on Bloomberg. Trump was talking today. I didn't see anything crazy come out. I did watch it live, but I guess he is doing a deal with Europe to send more weapons to Ukraine. So that was a highlight. And then NATO is going to pay for it, or Europe's going to pay for it, and US is going to sell it. That was notable. And then the last thing I'll do is I'm going to look at potentially cheap stocks. I have a screener, and these are just stocks that are at low RSI, and I haven't done the research on any of them. These are just companies that have a fair forward PE, not too expensive, make money. So these are real businesses. If they make actual profits, that's a real business. I try to avoid companies that don't make profits. The only one that stood out was maybe Nokia. That had a lot of volume, and Ericsson. So those might still have room to go lower, but I'm interested in watching those. Remember, the theory is low RSI stocks, if they're a good value, should outperform. So I like those. The other one I'm looking at is Lululemon. It's not expensive, but it's not growing, and it has a 34 RSI. I think Lulu is interesting. Deckers. A lot of these shoe companies so they sold off hard because of the tariffs, so they could be on sale. If I look at the valuation, like the forward PE on Deckers is 14. It's not too bad. Lulu also 14. Nokia 12. Ericsson 13. So they're probably cheap for a reason, but if you're looking for companies that don't have a 30 PE, like, Apple, Nvidia, Palantir, these companies are already rich and in greed mode, and I rather switch from stuff that is expensive and get some cheaper stuff. I think I'll leave it there. Anything by 5-year sheet, the stocks that stand out, no real headlines. I guess there was a pretty decent move in Li, which is a Chinese automaker, electric. That would be an interesting look. That will be an interesting one to check out later on. But nothing crazy. If you have any stock requests that you want to look at, go ahead and put them in the comments and I'll mention it on the next video. Cheers.